Ladies and gentlemen, welcome back to another video. Today we're going to take a look at gold. I'll give you guys a detailed breakdown from a monthly to the weekly and the daily. We'll also look at some sentiment, fundamental and order flow data as well. If you are new to the channel, a sub would be appreciated as I do provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, if you have any questions, please drop them down in the comment section and I'll be sure to answer them as we go along as well. Now, the one thing that we need to understand is that we had the US interest rate decision that popped out yesterday. Then with that, although the rates were kept at the 0.25%, which was unchanged, we still saw some bearish momentum coming through on gold. And I'll take you through exactly why one of that reasons could potentially be as soon as we go and look at the fundamental data. But looking at gold from a technical perspective, we can see how gold is still stuck within this consolidation phase. So the market entered this consolidation phase here on the 1st of July, and we've been there since last year in July, and the market had not given us any breakout out of that entry with a clear close as yet. Now, looking on the weekly time frame, what do we have? Now, from a weekly perspective, we know that this was a very strong level of resistance that the market had tested a couple of times in the past. So the market tested it once, twice, broke above that. All of that resistance became support. Support got broken. Support became a resistance again. Market rejected that. Market then go and did a liquidity hunt right there on the top, rejected that level. And we can see how the market's busy again melting to the downside there as well. Now you're on the daily time frame. What do we have now? From a daily perspective, we can see this level over here acted as a level of resistance. The market broke above that, came tested as support, and then the market continued higher, hit that neck line of that M that we previously spoke about over there, and now the market is seem to making a bearish move to the downside. But most of this, especially today's red candle and part of yesterday's candle, purely came from the interest rate decision or the statement that Powell had released yesterday. Now, here from a daily perspective, what do we have? Now, we can see how the market is printing this information. After the information, you expect to pull back to the neckline before the continuation. Market also printed this impulse. And after an impulse, you expect a correction. And the best way to measure that correction is by taking your Fibonacci there from the high to the low of the impulse. And you can see how the 61.8, aka the golden ratio, is lining up perfectly with the neckline of the information. So there's definitely a pullback expected in gold before the continuation to the downside there as well. Now, we know that Powell had made a few statements yesterday speaking about the fact that they could potentially have that interest rate hike starting in March, but we'll speak more in detail about that as well. Gold is currently printing an equal low, also testing 1806 as a previous level of support there also. Now this is the way that we're going to approach the situation on gold. Now looking at the sentiment data, so what the retail traders are doing in the market. Now we can clearly see here we've got 78% of retail traders that bought gold, and then we've got 22% of retail traders that sold gold. Now we can obviously see here the market clearly did not go in the way of majority of retail traders, because 78% of them entered a buy position and the market just started the meltdown all the way to the downside. Now I spoke about gold when the market was sitting at this level. I spoke about gold when gold was there. And I also made another update of why you could see that next move to the upside. Then I made a new breakdown to explain excuse me, all of this move, and you can just refer back to the previous videos that I've made there as well. Now going into moving forward, this is the way that we are going to approach the situation. Now we understand that they had not hiked the interest rates at all, so there is definitely a short pullback in the market expected before the continuation as well. Now like I said over here, from the retail traders perspective, we can clearly see that once again the retail traders won the wrong side of the tracks. Now if we go and look at what the hedge funds are doing, or the COT data, so the commitment of traders, so this tells us what the big banks and hedge funds are doing in the market. And we can clearly see, based off last week's report, our hedge funds came in and they added 426 long positions and they added 5,956 selling positions. Now we can clearly see that in the market's movement for last week. If you take a look at gold for last week, we had that short bullish move to the upside, and then the market just started melting to the downside. Now the market had printed this level of support got broken, the market then came back, tested all of that support once again as resistance, and the market just started melting down to the downside from that level there as well. Now one thing that we need to keep in mind is I'll go over some of the things that Paul had spoken about, and I'll give you guys some sort of an indication of exactly how you can approach the situation from a fundamental perspective as well. So Jerome Powell, he came in and said that there's a risk that inflation will not decline back toward pre-pandemic levels anytime soon, and that the rise in prices could accelerate. So he clearly is quite aware, or he's making it quite aware, that we could still see that inflation rates can increase from here. Now next month, which is the 6th of February, we do have the new PMI data that's coming out. Now PMI data is used to measure, or for investors to see whether a country is heading into an inflation. So if we get to do a high, so if the PMI numbers for next month is coming out and it is quite high, and you could definitely expect that, for gold to continue to the upside, because then there is definitely a risk of the US dollar going into recession there as well. He also said that inflation risks are still to the upside in the views of the FOMC participants, and certainly in my view as well. He said that there's a risk that high inflation we are seeing will be prolonged. There's a risk that it will move even higher. So we don't think that the base case, but you ask what risks are, and we have to be in the position with our monetary policy to address all of the plausible outcomes, he said. He also mentioned that supply chain issues were taking longer to be resolved than the Fed had originally anticipated. Now we have to be reactive and not predictive. Now if we look at the data that Powell has spoken about, he is saying that inflation is quite high. Now remember, when inflation is high and interest rates are low, the only way to find the balance between the two is that you need to get inflation in line. You need to hike interest rates in line with inflation in order for there to be a balance between the two. Now, one thing that we do need to keep in mind, when that PMI data comes out next month, and the PMI data comes out higher than expected, then that clearly states that the US will be heading into, or that, well, that tells us that the inflation is sky high, and we can definitely expect Powell to hike the interest rates higher than anticipated. Then if the data comes out again in March and it's still higher and it doesn't decrease, then that's still bad news for the dollar, because remember that that gold and silver has got a negative correlation with the dollar. So when the dollar goes up, like you can see over here, gold tends to go down, and when the dollar goes down, gold tend to go up. But one thing that you need to keep in mind is that interest rates with high inflation could lead to recession, and that is bad for the US dollar. So if the interest so the most important thing that we do need to look out for in the long term is what the PMI data is going to show us for next month, because that will give us a clear indication of how many times Powell could be hiking interest rates for the year. If they do hike interest rates more than anticipated, it will be good for the dollar. But if inflation doesn't come down because of that, then the US will definitely enter into a recession, and that means investors will run to safe havens, which is gold, silver, as well as the Swiss franc and the Japanese yen as well. Now, once again, that's all from my side. Thank you so much for taking your time for watching the video, and as always, cheers for ears.